All right, checking out the sectors. This is XLC, the communication sector. High and tight flag above the longer term 161.8 and shorter term 112 to 119, and consolidation within range. High volume node developing here around 115 to 117, and the shorter term 61.8 supportive at 113.89. Really not too much to do in here until we see a break of either side, unless there's a decent setup in one of the XLC stocks itself. Google, etc. But not bearish, right? This is the XLE. This is energy. You can see that extension from the previous breakout. We do have some retracements up here at 57s. So that gives this sector a little bit more run room, about another 5% higher. Risk here, of course, is 9% lower to retest the support structure that we broke out from. So short term can trade around it. You can kind of see some consolidation efforts here up at the top as we came into the end of the week. So not really a great one to play out alongside or short side really until you see a topping pattern or a consolidation to break back higher. The financials are generally okay. We're consolidating up here. We've been up here since June of last year, most part. This is kind of more like a broadening wedge. You can kind of see the uptrending resistance line here, and then the supportive base down here, just offering a little bit of extension up and out each time. Support for now will be 51.05. Risk comes in below 51.05. There's a high volume node here. There's a high volume node here in range as well, 51 to 53, which is being overall supportive on the weekly. Do need to recover 53.16 and 54.50 to get the all clear for up into the 61.30 range. Risk comes into the financials if we lose this 51.05. Really opens into 47s, 46s. So definitely a must hold here for financials. This is the XLI. Starting to extend kind of like the XLE has. It did come out of a major consolidative set here, so not overly shocked, but we do have a fib up here about 186 that will be interesting to see. We may really just get a little bit more of an extension up to allow the 61.8 to meet up with a 61 or the extension here as well. So overall, again, just kind of like the XLE, and unless it shows topping pattern, there's really no short involved. You can play the shorter term trends out of it like that. But again, just kind of hard to chase this at this point in the rotation. XLK tech sector, short term 160 or short term 61.8 at 137.50 holding price. Also a couple extensions in here as well. Consolidative, similar to the XLC. This one just happens to be downtrending. We'll want to see a break of 145.64 for the all clear in the tech sector to open to previous highs and higher. The next one is the XLP, consumer staples. You see this one again starting to extend up into a larger cluster of retracements up here from 90 to 94. Support down here at 84, so there's really no reward to the potential loss here, even to the top one is still only 1-to-1. So risk here is watching for a topping pattern around here, or at least just a consolidation effort to build value higher to hold this extension handle. The XLV is healthcare. I like the healthcare. Nice high tight flag here against the 261.8, 156.11. Consolidation on the weekly really since November. Hold above 157.78 allows for the move higher, 160.6 into 165.14. Loss of 154 opens down into 148 and 145. And that's the XLK or the XLV on the daily. You can just kind of see that resistance within range. So really do need to see a daily or two candles cover above this 157.78 for that entry long. And finally, the XLY discretionaries, very similar look to the XLKs. A lot of attachments to the two. Amazon and Tesla in the XLY, and obviously Apple Softy in the XLK. Again here, 116 is support with a high volume node in range and developing. If we can hold that 116, offers that rebound up into 125 with shorter term resistance at 121.34. Again, just a consolidative effort here. While we hold this consolidation, not really too much else we can do. Lose 116, opens 110 to 107, maybe even 101.50. Back above 121, opens 125, 135, 140. So overall, there are no absolutely horrific looking stocks, right? There are ones that are coming into extension points, but it doesn't by any means make them bearish, right? It can just be a consolidation. So until we see some of those sectors break down that hold more of the weighting, for example, the XLC, if the XLC broke down 111.71, and creates range down or creates range up. The XLK, again, a consolidative effort. XLY, consolidation on a weekly scale. So I mean, inherently, none of the things that are happening are overall bearish. If we start to press below some of these areas of support, some of these high volume nodes on the individual sector charts, this becomes an issue. But for now, it just seems more like a rotation. Now the issue is when this rotation of overextended sectors like the XLI and the XLP, for example, and the XLE, when they stop their progression higher, is there going to be something else that picks that up is the question. And so that's what we'll wait and see.